And right. Most of us, what I've discovered is we know the concepts of trading, but what's affecting us right now is our mindset and our risk management. Right. So what do I mean by that? I'll also be sharing some of the concepts on the screen which might be useful in how we also all enter and exit trades. Right. What does it mean? What it means is we have certain type of people who at some point they're like, oh, this is an order block, or this is an order block, or this is an order block, right? Or this is an order block, but they don't know how to take them, right? I might have taught you, remember, I taught you that whenever, let's say, we are having our high at this point over here, I taught you that whenever you try to choose an order block, you're choosing an order block that lies within the 0.618%, right? So meaning that most probably you're going to take this one or this one. Now, where most people fail is not because they don't know where their entries are or they don't know where their entry points are, but where most people fail is we try to chase the trades or we get overexcited into thinking that, you know what, our trade is now playing, whereas it hasn't played yet. What do I mean by that? What I mean is, say we were in our okay uptrend, right? And we discovered that we have an order block around this area, or maybe we had a point of interest around this area, right? And when our trade now comes to it, some people are like, you know what? Let me enter just, let's say it's supposed to come and get in the OB, right? But then now it acts like it wants to buy. Some people are like, you know what? Maybe price is now running away from my OB. So let me just enter my trade at this point over here, right? Let's say this is your entry, right? And later on, you discover that it comes and then hits your OB and then it goes up. But during this moment, you're already in an entry here, right? And the more it's going against you, the more you're adding entries. This is what happens with most of the people. This is what happens with most of the guys, right? And it's almost always that people do that. You are now in loss. You start adding entries. You start adding entries. And by the time your trade comes and reacts in your point of interest, you've already blown your account. Whenever we see a trade that we feel like it's supposed to come and react in our point of interest, let us leave it until it comes to us. We do not chase price. We don't run tichidzingira price. But what do we do? What we do is we wait for the market to come to our entry and then we buy. Or if we are selling, we sell. Now, there's something that we call risk reward ratio. We have a certain group of people whereby this is supposed to be our entry, right? Let's say our entry is just supposed to be like this. I'll just give a rough sketch, right? Let's say our trade is supposed to come, and then this is our buying area, right? Knowing that our entry is exactly here, right? Obviously, the next thing that we want to do is wait for our trade to play and then go up, right? But have you ever discovered something? We have a certain type of people that instead of waiting for price to come to this area, right? What they do, just like I said previously, they take entries around here. When they take entries around there, what you see now is you float in a negative 100. Let's say your account is $150. It is $150. And then you wait for it to float into a negative 100. Now, when your account floats in a negative 100, what you see is sometimes your setup will play. But just because you took the wrong entry, imagine how many prayers you pray when it's going against you. In that moment, you become the most religious person on earth or the most prayerful person on earth because you'll be praying for your account not to blow, right? And then now when it comes to profit, instead of you leaving your account to grow to $300, you now close at $152. Like, what's that, guys? Like, the risk wasn't worth it for you to experience a negative 100 so that you could close your account in a positive $2 on a $150 account. So now there comes what we call risk reward ratios. And from the way that I've taught you before, let me now go on the actual chart and show you how real traders really handle their risks, right? Now, let's say I wanted to enter this trade. Let me give you a specific one. Right, like here, what we have is we can already see that we have a change of character over here, right? And this being our change of character, we can see that we have an order block here and we have an order block there, right? Now, imagine, let's now forget the fact that let's forget the fact that we are doing this on a 24-hour chart. Let's say our point of interest was actually in a 30-minute or 15-minute time frame. So imagine if you get patient enough to know that this is your OB, right? And this being your OB, your market has already told you that it wants to go down. Why? Because you have a change of character over here, right? And after that change of character, what comes next? We know that there comes a breakout structure, right? There comes a breakout structure. I understand the guys that I'm coaching on mentorship, we've been doing this in the morning. I think you can actually see what I meant. I won't go deeper, but you can actually see what I meant. Right. Now you having a BOS over here, what you know is your OB is valid. So you get overexcited and then you're like, I have a change of character at this point. So let me enter this trade. Imagine it will carry you, right? It will go into profit, you're gonna get happy, it will carry you along. And by the time you actually get to your true point of interest, maybe you've already blown and then it's done. But where is your TP? Let's say you're selling from here, targeting this low over here, right? I think we can all see this low, targeting this low over here. What it now becomes is you are risking 1 is to 2. Meaning for every $10 you are risking, you want to get $20. It doesn't make sense, right? But if it was me, now I know that this is my sniper entry. My stop loss is as small as it is, right? So from this point up to this area, let's say now I put my stop loss at like this much. And I sold off from that area. How much risk reward ratio am I putting in? So let's do it with the actual item. Right. You'd see that for my risk reward, it would be 1:10, meaning that for every dollar that I'm going to risk, I want to achieve $10. Or for every $100 that I'm going to risk, I'm going to achieve $1,000. Right. So if my account had $100 and I was risking $10, that's what it means when we say 1:10, right? If my account had $100, that means per trade I'm going to risk $10. And for that $10, I want to achieve an extra $100. It's unlike this guy here who has entered, right? And he's saying he's 1:2. He's saying for every let's say for every $100 that I want that I'm putting, I want to gain 200, but I want to risk $100, meaning that by the time you get here, you've blown your account already. But this guy who's known that I've entered using a sniper entry, I've waited for my trade to come at my actual point of interest. How much is he or she getting? He's either losing $10 or he's either benefiting $100. So there is what we call a fear of missing out on trades, where someone is like, they've gone to deposit and you've just come from depositing. And while we are in town, maybe along Julius Nyerere, you see something that looks like a buy, and then you're like to yourself, today I can do it. If I buy it, then I hope it's gonna go in my direction. The moment in trading, when you start hoping, when you say, I hope it goes in my direction, know that everything is wrong. In Forex, a trader should act exactly what I want to tell you right now. In Forex, a trader should be like, all right, this is my chart. This is my V25. What do I see on my V25? I see that there's a gap, right? So what does it mean? This means we have a rejection here, and having a rejection here, where is my price going to go? It's going to come, fill this gap, gather momentum, and then come and break this high or grab the liquidity that's above here. A Forex trader should know why a trade is behaving the way it is behaving. A Forex trader should be able to know where a trade is going, how it's going to react when it goes to that point. Right. That's what a Forex trader must do. You shouldn't be like, I can't see anything on the charts, but I feel like price is buying. If you feel like price is buying, trust me, as long as you feel like and you don't know that it is, you are always going to lose. Right. So now there is a certain question that I get, which is, how much should I deposit in my account when I'm trading? How much should I put in my account when I'm trading? The truth is, a lot of us here, we are almost all of us, we are retail traders, and the money that we can afford to put in the market is little. Right. I can put $10 in an account and it can grow to 100. But am I going to be able to consistently do it? As long as I do it once in a while, it means I'm not consistent, right? There's there's what we call the 1%, the 2%, the 3% rule. It doesn't, in actual fact, it doesn't really apply to us. Whereby we are told if we put our money in the market, we're supposed to gain at least 1% or 3% of our money on a daily basis. What you see is if you put $100 and you want to use that rule, you're going to get $1 a day for the next 100 days. It doesn't really make sense. So what does that tell you? What it tells you is already the equity you are putting in the market is little. So how can we tackle that situation? We tackle that situation by moving at least 30 to 50% of our account size per day. But If we want to grow 30 to 50% per day, how much should we be risking? We should be risking at least 5 to 10% per day, meaning that if I get a sniper entry, right, I'm not supposed to have a loss in $100 account. If I get a sniper entry, my loss is not supposed to be above $5 or $10. Now, where does that mindset affect us at the end of the day? Where it affects us is once you see that you are above that $10 mark, you are obviously going to say, I hope he's going to buy or I hope he's going to sell. And then you hold on a little longer, you add another entry. You hold on a little longer again, you add another entry, and then you blow. So there's a question I asked in the group. I actually wanted to see how many people were going to run that poll and where most people were going to vote. When I asked how much profit do you think you can make on $100 account, and I saw I think a majority agreed with $20, which is quite okay. But we being traders, takedowns takapenga, we want to, fill ourselves. We want to raise small accounts. We want to flip them on a daily basis. Yes, some people are so much likely to have that, but it's those small habits that you start building today that in the end are going to either name you a bad trader or a good trader. So if you're a risky trader today and you're that type of person who puts $100 in their account, and you are like, if I risk everything, it's fine, I'm gonna lose. You're always going to lose. At some point, I think in 2020, it was in 2022. Yeah, I was in Turkey, and I remember that day I was on I was on a train going back home, and I had raised $2,000. It was around somewhere 9,758. And I just wanted that $230 that was left so that I could get my account to 10K. So what I did was I got into my favorite pair, which is V50S. And then when I got in that pair, it never gave me profit. It went straight to loss. And when I thought, you know what, it's supposed to react here. Let me add more entries. I added another entry. I was using one lot. I added another entry. And then my account was down 2,000. I added another one, it was down 3,000. I added, I think, three more, 4,000, 5,000. My account was back to 2,000. Then I was like, let me close it. I failed to close it. And it all happened in under 2 hours. And then I blew 9,000, 9.7, just because I wanted to reach 10K. My mind was telling me, you know what? Um, if you keep on holding, you're going to make it. And then I failed. The moment that I blew that account, it started going my way. I was so much devastated. I worked to raise that 2K to 10K. I got to 9.7, I got greedy, and then I blew it. Greediness is something that psychologically affects us, but we don't know it. People can laugh at you and be like, why is $20? You've put $20 in your account. You are now at $50. You're moving at a slow pace. Or you might feel ashamed to withdraw that $30. But what most people don't know is those small amounts that you start withdrawing today, those are the ones that are going to keep you consistent. Those are the amounts that are going to make you keep on withdrawing. In 2020, when I started trading Forex, like when I started getting really good at it, I would end a trade, withdraw $10. End a trade, withdraw $10. By that time, Deriv was not called Deriv, it was binary.com. At the end of the day, I would see that, you know what? I've withdrawn a total of 150 or $200 just by withdrawing small, 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 small. So don't be challenged when you see someone trading a very big account and you're like, I'm going to raise this $10 to 1,000. I have a student of mine who we just started doing mentorship with. If he was in this session, I would unmute him. He said he raised $9 to $1,000, but because of impatience and frustration, I don't know whatever frustration that he had, he blew it. But was he able to raise again? It's Marco. He actually raised your hand. I'm sorry I'm talking about you here, but that's what you said, is it?
It's okay. It's okay, my brother. That's the truth anyway.
Exactly. So at the end of the day, what most people don't realize is you can know everything in Forex. You can know where your entry is, but are you going to stick to that entry? Guys, I'll always say this, and I'll always say this. There is no entry that you don't see any break of structure, that you don't see any market structure coming to it and breaking it. If it is there, come to my inbox, show me, and I'll do something for you straight away. So what I taught you about these entry models, it will always be there, but it's now up to you to either wait for those points to play out or for you to get impatient and get hit. Now, what happens when someone blows? What happens when you blow? Some people we get angry. Some people we want isolation. Some people we want revenge trading. Whenever you blow an account, I advise you at least rest for a day or two. Don't be like, I'm under pressure, so I need to deposit and trade again. You will blow and you blow. 99% of the times you blow. Right. So revenge trading is not part of the plan. Whenever you blow an account, rest for a day. Come back tomorrow strong. When you come back tomorrow or the day after tomorrow, try doing your charts again. If you open your charts, you don't see anything. Don't do anything. If if you open your charts and all you see is price just playing around, leave it like that. Go and play football somewhere else. Or kunotamba nevana nezidhori. Why? Because when you try to force trades at the end of the day, you're always going to fail. It's normal for a trader to go for a day or two or even a week without even trading anything. Just because you have money in your account doesn't mean you should trade it. Sometimes just having money in your account is just proof that you are a trader. But when you don't see any entries, don't. I myself, at this point, I still learn. I still have a few courses that I'm doing that have to do with trading. I still have a few more researches that I do that have to do with trading. So whenever you find that you are it, take time to rest, go and research, come back. Now, there's another question that I've been getting, and I think I'll finally answer it here. Someone has been asking me, what is the best instrument to trade? Should I be trading world trade, derivative, or currencies? My answer is real traders. This is controversial. Don't beat me, guys. If you want to make it long term in Forex, focus on currencies. If you want to make it long term in Forex, focus on currencies. Currencies here, these are the real market. Okay, Shava, you can ask. Where are you? Hey, I can't see you. I can't see you now. Okay, Shava, you can ask. I've unmuted you. All right, I think most probably there's a problem with your network because I've
Okay,
unmuted you.
okay. Good evening, boss.
Evening.
How are you? Can you hear me clearly?
Yeah, I can hear you.
Okay, I wanted to ask something concerning the brokers that give us my synthetics.
Okay.
What's your take on the issue manipulation? Is it something that you have come across, or is it just talk that brokers that offer synthetics usually end up manipulating people when they enter trades?
I've never seen manipulation in deriv.
Oh,
I've personally, Angu, I've never witnessed it, neither in World Trade, but I've
okay,
worked, I've worked Nema brokers directly. Like I've actually sat in a broker's office and worked there for some time. And what I can tell you
okay,
is currency brokers, they manipulate price more than what you actually think Kutima synthetic brokers manipulate price.
okay. Thank you very much. Thank you very much.
Why am I saying that? We have two types of my currency brokers. I want you to understand this. We have two types of
Okay.
currency brokers. We have currency brokers that offers a service where we trade from MT5 directly
Uh,
to the Forex market, right? And then they
mm,
get given commissions. Ioma brokers and they get given commissions
yeah.
by the Forex market. And we have brokers that to not trade from our MT5. Then it goes to the
Okay.
broker, right? And then it goes to the
Yeah.
Forex market.
Okay. Okay.
So
Okay.
these
Thank you very much.
ones now are player directly in our trades. These are the guys that
Uh,
manipulate our market the most, especially when you see on news events or NFP, Pharma CPI
yeah.
events. Whenever you try to
Eh,
close trades as equal,
yeah.
or what they do is they increase my spreads. The issue my spreads, it's
Okay.
under
Okay.
currency brokers more than it affects my derivative traders. Ndopaipa pekuti tinoisa na same stop loss inini kuhot
Okay.
forex ndoisa
Okay.
same stop loss, imimi tomboti kana kujumbo forex moisa same stop loss, but kujumbo forex
Okay.
stop loss inorohwa asi kuhot forex hairohwi.
Yeah, I've actually seen that.
Yeah, so it's actually the currency brokers that manipulate more. What you need to know is what you
Yeah.
need to know is
Yeah.
currencies, it's direct human behavior. It's different from
Okay.
synthetics. Synthetics, these are just a stimulation or emulation. I don't know whatever they call it. A stimulation, right?
Okay. Okay. Yeah. Yeah. Yeah.
Yeah.
Okay. Thank you very much. Thank you very much.
Okay. Emmanuel, you can ask. I can't see your hand anymore. Right. I have another class in. I have a mentorship class that I have to hold at just around 8:30, and our session is now coming to an end. We have a minute and 20 seconds remaining. So what I'll do is I'll ask Kudzi if I can share my number in the other channel so that whatever question you have to ask, we'll continue with this session is a question and answer now instead of me just talking, right? And I'll create a WhatsApp group for you guys. Or alternatively, what you can do is